Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, April 17th. Really like a Friday, though, last trading day of the week as markets are closed for Good Friday. 5:40 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. No podcast this week. Todd will put out a weekend walkthrough probably on Saturday. That's YouTube only, so keep an eye out for that. State of the market, we're in a harsh correction. We define that as 12% or more off of the recent high in the S&P 500. Check the trend gauge over here. We've got the despised four red arrows, but we did add back the yellow sub arrow on leaders as the weakness kind of in the overall indexes this week is very much attributed to the lag 7, not the Mag 7 any longer, dragging down the indexes because of their high market cap and weighting in the indexes. So some potential leaders acting better will revisit the Purdy 30 stocks that I talked about on Monday, and really only three of them underperformed the S&P this week. So that tells me if the market situation gets right from a tariff standpoint, leaders can work. They're not working now. Um, they're getting slapped down if they try to make any progress. But so the market wins are very clearly still in our face, as you can tell by the short term, medium term, and long term trends all being red. So what happened today? Mixed closed, kind of disappointing if you're a bull, as we're up nearly 1% on some tariff headlines, comments by Trump and Besant, but faded into the close. Big tech lagged again. However, after hours, Netflix is up around I've seen it up as much as 4.5%, 5%, up around 3% right now. After hours on a really solid earnings report, this is something we'd absolutely be buying on this report if the market was in a better posture, but it clearly is not. The Big Eight down 0.50%. The RG8, sorry, growth ETF composite up 0.5%. S&P 500 gapped up 1/3%, made it pulled back in the morning, rallied for about 4 hours, higher highs, higher lows, but then faded into the close, ending up only 0.13%. RSP equal weighted. You can see how this outperformed, up 0.75%. The NASDAQ 100 lagged barely negative, equal weight up 0.5%. Again, that's pointing to the big tech lagging. Dow got hammered because its highest weighting, United Healthcare. It's a price weighted index that got hammered on earnings. So that carried the Dow down 1.3%. Mid caps and small caps put in a solid day. Global 60/40 up 0.25%. Our flagship GROTECTION portfolio only about 10% invested long in the S&P 500, up 0.03%. Let's get into the charts. We'll start off with the S&P 500 here, and a bit of an expectation breaker yesterday. We ran into the declining 21-day moving average on Monday, pulled back again at that level on Tuesday, gap down, and on some hawkish comments by Jerome Powell at a speech in Q&A, had a weekday breaking back below the 8-day moving average. I commented on Monday, this is what we were watching, is the downtrending 21, uptrending 8-day moving average. Had a nice inside day on Tuesday, but failed on Wednesday. Another inside day today. Top of today's action ran right into that declining 8-day moving average. As long as we're below that level, we will keep our very defensive posture. So the hopes and dreams of breaking through the 21-day earlier in the week and up through this 5,500 resistance level very clearly thwarted for now. Onto the NASDAQ 100. You can see the weakness over the last week and a half, 2 weeks here. Ran into the declining 21 also this week, broke the 8 yesterday, tight inside day today, but lagged slightly negative on the day while the equal weight NASDAQ was up 0.5%. So not getting any good news from the NASDAQ 100. Let's go to the RSP, the equal weight S&P 500. Uh, had been lagging over the prior 2 weeks, but a positive week this week. Let's go to the weekly chart here. You can see it was up 0.40%. Meanwhile, the market cap weighted S&P 500 down by 1.5%. And for the week, this is why the NASDAQ 100 down 2.27% on the day or on the week. Dow Jones Industrial Average hammered by United Healthcare, as I said, down 1.3%. It's also back below the 8 and couldn't get up through the 21 day. Mid caps, S&P 400 at the 8 day moving average. Didn't quite get up to the 21, but some relative strength over the last couple of days, as well as with the Russell, some relative strength this week. But peeking its head above the 8 day moving average now is the Russell 2000. Let's go to the VIX, back below 30, which is a plus. And this 30, puts it the projected volatility over the next month at a little less than 2%. Over the last 21 days, however, we're over 3% as an ATR on the S&P 500. We really want to see this contract and ideally get the ATR of the S&P 500 down close to 1 right now, above 3. The market does its best work when there's minimal volatility. You simply don't get shaken out of stocks, and leaders tend to act better. Not tend to, they do act better. Onto the dollar. The dollar continues its weakness down slightly today. You can see breaking down from here and then breaking down from this level again and again. This is all tied to what's going on with the tariffs. Let's flip to precious metals, which had been leading but pulled back today. You can see this big gap up. Closed at the top of its range, however, on GLD, which meant that this candle wasn't abandoned. GDX is gold stocks down 1.91%. Silver lagging but bounced off the 8 day moving average, and Bitcoin showing some relative strength above the 8 and 21 day moving average, trading tight over the past week, surprisingly. On to bonds, BND, global bond down on the day, TLT, long bond down on the day. That means that you're going to see interest rates higher. Here's the 30-year up 1.3% and the 10-year up 1.26%. Let's go to the tail of the tape from here. We did get updated sentiment indicators. Bears remain dominant in the AAII survey, but also good to see that investment managers down to 35% invested. This is typically down near the levels where bottoms tend to get put in. Again, this is a secondary indicator. I'm not making any call based on this, but it's very good to see investment managers. If the market starts going higher, they have to pile in because they get fired if they underperform. If the market's going up and you're an investment manager and you're not going up, you're going to lose your capital to somebody who is going up. So seeing them, this is actually fairly low from an NAIM perspective, and that's why we've got this highlighted in green. Mentioned Netflix after hours beat and raised the reaction higher. It's right up from 973 to 1,000. After hours, we will look at that chart in a minute. Keys coming into today. S&P and NASDAQ against the 8 and 21, still below both of those levels. Leadership sideways to up, mostly up. Follow through day, no follow through day. Day count, 1 day down with an inside day, so down 1 with a consolidation day. Second day back below the 8 day moving average, 17 days below the 21 day moving average. Our expectations remain negative while we stay below that 21 day moving average on the S&P and the NASDAQ. Sectors today, 9 out of 11 of the spider sectors higher. Again, this is indicative that breadth was better than is indicated by the close on the S&P 500. Oils, transports, retail, and international stocks led as the Eurozone cut rates, something that Trump would like to see, but Jerome Powell is not interested in all at doing. To the downside, XLK and V, that's tech and healthcare. Semiconductors, software, gold and silver stocks lagged. Our only holding in GROTECTION, SPLG, about a 10% size. That puts our RVAB at 0.10. That's our adjusted beta. And our estimated balance at risk, 0.31% to the downside. No trades in the portfolio today. Bottom line, mixed closed while big tech lags, but potential leaders uh, acting firm, mostly with a pretty good week. We'll take a look at those charts in a minute. Keys going into not Thursday, but now Monday as we're closed for Friday. We're going to keep our eye on that 8 and 21 day on the S&P and the NASDAQ. Continue to look on the for signs of leadership, and can we get a follow through day with volume and price instead of just price. Let's go to what was on Monday, the Purdy 30. I uh, only deleted one name from this, the original 30, and six got added onto it. So we'll take a look at a few more names. But MP Materials, just too volatile. You don't want to have an up 8% day followed by a down 12%, followed by up 7%, followed by down 5%. That's just chopping around speculation. They're in the right area. Rare earth metals mining and processing, and obviously with China saying that they're restricting the U.S. access to it, is something that's certainly very attractive, but not with volatility like that. So that was the one that got deleted from the original 30 last week. Let's take a look at the action of some of them that continued to act well. And what you really want to see is this continued relative strength that started showing over the last week, continuing since in the last three trading sessions. We got stopped on Palantir, market weakness when it broke back below this 50-day moving average, and the lows of Monday and Tuesday expected it to hold. It's right in there. This is a champ. This is one that if the market rights itself, I absolutely want to own. Don't want to let it get away if it goes higher, but things have just been better to buy on pullbacks and not on strength, and that's indicative of the type of market that we're in. CrowdStrike next up, broke back below the 50, sitting on the 8. This is another issue with the market. We really want the 8-day stacked above the 21-day, stacked above the 50-day, stacked above the 200-day, and them all in a upward slope. Those are few and far between in the stocks that we're looking at. And again, that's the market holding them back. But this is certainly in our top five as well. CrowdStrike as well as Netflix. You can see up 3% right at the 1,000 level after hours. Really nice double bottom, relative strength, new high, great numbers. There's the only thing holding this stock back is the market. Uber continues to show serious relative strength. Celsius, 8 sideways action. Again, just got back above the 200-day moving average, and the 50-day is still below the 200 on this. So some obvious flaws there. But what we're doing now while the market's weak is identifying the relative strength line, things that are holding up, still have good fundamentals, so that when the market rights itself, we're all over the right names. TGTX still looking pretty good. Vertex as well. Ollie undercut yesterday, but reclaimed the 21 today. Guardant Health, some tight action this week. Sprouts continues to act well. Relative strength, new high. WGS down today, but bounced at the 21. Axon undercutting the 50, but on the 8 and the 21 again. Moving average is not configured the way we want them to be, but still making progress on a relative strength basis. It's just our watch list, not a buy list. LNG, relative strength new high, up 5 days in a row and up 5 out of the last 9 days. KTOS, this is very typical of what happens with strong stocks in this type of market. Breaks above the last 4 day highs, gets slapped and turned around. You're going to see another one of these in a minute. LRN, relative strength new high, looking great. BJ's, not a big leader, not, obviously, with a -1% on its annual sales, but this is a place for institutions to hide the way it's acting. Lantheus undercut, reclaim the 21. Take two continues to act well. DRI, also Berkshire, another place to hide for institutions. Northrop Grumman, nice day today, relative strength, new high. GEV, another example of a stock. This had a double upgrade today, broke above the highs of the prior 3 weeks, and then immediately sold off. This is what happens in weak markets with growth stocks. Bitcoin, we already looked at. TKO, tight action. Robinhood, below the 21, but still above the 40 level. Dash, tight action, double bottom base. Spotify, relative strength, new high, double bottom base. Primo Brands, tight action. This is probably just defensive. I mean, they sell water, but they do have decent fundamentals. Carvana, a play on used cars as opposed to tariff-ridden new cars. GDX pullback, Chewy. Okay, so these are what have been added since Monday. Chewy, relative strength, new high, grinding higher. Eli Lilly, good phase 3 results on their weight loss pill versus the injection, up on almost 200% above average volume, up 14%. Ugly looking base, but that's the N in CanSlim. People would much rather pop a pill than take a shot. Cart regaining 5 straight up days. Eat added back, showing relative strength. And Penumbra, nice tight bottom double base, great fundamentals in the medical products group. And that'll wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Reminder, our flagship portfolio, GROTECTION, is designed to grow assets during uptrends. Rules to make sure we're in, and then protect during downtrends. Rules to make sure we're out. We and we highlight it every night on video, exactly what we're doing. People that have been following us for a long time are seldom surprised by what we put in the videos. We've been pretty clear, um, communicating our vision and the way we operate in the markets, and it's been very successful. And we appreciate. We're less than 2% from all-time AUM highs, while the markets have been under some serious pressure. And that's just proof is in the numbers that the approach works. And with that, I'll wrap it. Enjoy your Easter weekend. That'll wrap it for Thursday, April 17th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening. Have a great weekend.